Hey guys, welcome. So Bank of Canada has raised rates by 0.25% and Rick has lost 25% of his hair. Stay tuned to learn more. Please note the full disclaimer here, which is also located in the About section of my YouTube channel. Thanks for joining today. So the big news a couple of days ago, the Bank of Canada has raised rates by 0.25%. And about the other news, don't worry. I just got a haircut. I'm not quite going bald just yet. So what I've got showing on the screen here is what that actually means in terms of numbers and evaluating a rental property as an investment. Assuming a $500,000 purchase price on the property and putting 20% down, as I mentioned before in previous videos, banks normally require 20% deposit on an investment property. So on a $500,000, let's say studio in Toronto that you may want to purchase as an investment to rent out and build wealth over time, you've got 20% down, so that's a $100,000 payment, and you've got a $400,000 mortgage amount left over. If we amortize that over 30 years at a 1.5% variable rate, the monthly payments we see here is $1,380.49. Now with this 0.25% increase, the rate now goes to 1.75%. And now when evaluating this investment property, we're looking at $1,428.98. Simply speaking, 0.25% doesn't appear to be a huge deal in this case. What are we talking here? We're talking about 48 bucks, so approximately a $50 increase. So again, that's what we're factoring in here. We need to look at other factors when evaluating a rental investment property, such as so this covers the principal and the interest. You got to look at also the taxes, so the property taxes. Look at what that is monthly, add that here. Then we've got insurance. You want to get condo insurance. The final thing we've got to look at is condo fees, so maintenance fees. There's really not much maintenance and things to fix up and do. And yes, you do have the condo fees, and that's essentially why you're paying those, is that you don't have to worry about things like, the roof, the air conditioner, cutting the grass, shoveling the snow, that sort of thing. So it's a pretty low maintenance, passive type of investment, which is one of the reasons why I like it so much. So again, that's the lowdown on what this 0.25% increase means. Over time, variable rates have saved people money. And even though we're going to have a few rate increases coming up, you may still find, when you do the numbers with a mortgage expert, that it still might be worth sticking with a variable because it's so much cheaper than a 5-year fixed rate, which right now, 5-year fixed rate, you're looking at around 3% versus some of the variable rates, you're still looking at around, under 2%. So that savings, especially if they're just going to be raising rates a little bit over time, you may still be better off going for a variable rate. So hope that helps for now. Thanks again for tuning in. Just so everybody else can share in the fun and learn about real estate investment, please hit that subscribe button. That would be greatly appreciated.